It is that time of the week. It is Econo Chat. Let's talk business with Mr. Daniel Steinman. I'm your hostess, Elsabe Dimiani. A warm welcome to everyone tuned in right now. Mr. Daniel Steinman. Welcome.
Hello, Elsabe.
Welcome on board. We are talking something very interesting. We have had a short talk before getting into this, and I am quite amazed by the information shared, and I can't wait for the listeners to also hear what Mr. Daniel Steinman is about to say. We're talking capital markets. A familiar word to some, not familiar to some, but what is capital market? Let's start there.
Elsabe, I'm so glad your first question is, what is it? Because remember last week we discussed yield curve. And yield curve is the earnings on the capital market. And people throw this word around, capital market this and capital market that. And it sounds very learned. But then you ask people, exactly what is it, you know? And then you get down to the crunch and you realize, maybe there's a bit more to the concept than what I initially understood. But for the purpose of enlightening our listeners, it would be futile to go into a very technical breakdown with lots of calculations and projections and this and that. The moment it becomes too mathy I mean mathematics type thing, people lose interest. I mean, you can ask yourself, what is your interest in mathematics? It's -0. I think for 99.9% of us, our interest in mathematics is -0.
Yeah, definitely.
But in the bond market, it is actually about money. So if you look at the funding requirement of the government or of the banks or of any private company, then you see that remark that I made last week, you can't shut down government. It doesn't stop at the end of the financial year and then carry on. There's no break. The continuity must be there all the time. The same thing applies to a very big company. Can you imagine now, let's take the biggest bank in the country, First National. On the 28th this year, I think it's leap year, on the 29th of February this year, they say to all the F&B people, guys, sorry, no salary today. It is end of the financial year, you know. We first have to stop everything and make the calculation. Then maybe 2 months from now we can pay salaries again. You can imagine that chaos.
The chaos,
Yeah. So big companies and but even also smaller companies, and the government cannot come to a stop. It needs to be funded continuously. That's why we're talking about projections in the budget, because you're not 100% sure. You're never 100% sure until about at least 18 months after the end of the fiscal year. After the end of March of the previous year, and you only get some clarity, some certainty with the publication of the annual financial results for the government as a whole. So until such time, you really don't know, but it has to carry on. And it is funded from two sources, two types of instruments. The one is the money market, which I'm not going to talk about today. That's short term. That is almost a speculative type of short term investment. It doesn't exceed 1 year. The moment you go longer than 1 year, you start looking. The money market is funded by treasury bills. We call them TBs, treasury bills, and they are 3 months, 6 months. 275 days. How many months is that? 9 months, and 365 or 364, 1 year. That is a completely different game. You will also see that your yields are slightly different. Your yield curve is slightly different. It's fairly volatile. It's moving all the time because it's just 3 months from now, 6 months from now. But that is what the government uses to fund its short-term liabilities. For instance, paying salaries at the end of the month. It's something that comes typically from the money market. What we're looking at is the investment side of the economy, of the government's economy.
Okay.
And that is called the capital market. And that comes back to the old meaning of the word capital in Old English and Old German. Karl Marx's favorite, or his very famous treatise on money is called Das Kapital.
Okay.
That's where communism finds its roots, in Das Kapital. But Das Kapital, it didn't explain the banking system in Germany at that time. It was highly critical of the banking system, because that is where Lenin later got his concept of haves and have-nots. You either in Das Kapital or you out of Das Kapital. I wouldn't say the same thing of the modern economy, because there's one big difference. Karl Marx in Das Kapital discussed the nature of money. Now that is a whole topic on its own.
Yep.
If you really want to know what money is, you will have to attend my classes for more than a year. Then probably you will still not know what money is. It's a very big philosophical thing.
Okay.
But the capital market in Namibia is the long-term funding market. In other words, you sell certain products in the capital market. You sell debt. Those products are various packages of debt. And it can be government debt, it can be corporate debt, it can be banks debt. They are all different types of bonds. So let's look at what bonds are.
Okay. Let's quickly go for the short break, and once we return, we will look at what are bonds.